Biden's oil trade could have environmental impacts, such as reducing greenhouse gas emissions by discouraging domestic oil drilling and encouraging clean energy development. One of the most controversial aspects of Biden's energy policy is his decision to block new oil and gas leases on federal lands and waters. This move aims to limit the expansion of fossil fuel production in the U.S. and shift the focus to renewable energy sources. However, some critics argue that this policy will backfire on Biden's climate agenda by increasing the U.S. dependence on foreign oil imports, which may have higher greenhouse gas emissions than domestic production. To address this concern, Biden has also pursued a strategy of buying and selling oil from the Strategic Petroleum Reserve, SPR, the world's largest supply of emergency crude oil. The SPR is a network of underground salt caverns along the Gulf Coast that can store up to 727 million barrels of oil. The SPR was created in 1975 after the Arab oil embargo to protect the U.S. from supply disruptions and price shocks. Biden has authorized the largest release ever from the SPR, selling nearly 200 million barrels of oil over the course of the last year. This move was intended to lower gas prices for American consumers and ease inflation pressures. However, it also depleted the SPR to its lowest level since 1983, raising questions about the U.S. readiness for future emergencies. To replenish the SPR, Biden has announced plans to buy 3 million barrels of crude oil, marking the start of a years-long process that could cost billions of dollars. The administration has said it will buy oil when prices are low and sell oil when prices are high, following a trading strategy that could generate revenue for the government and reduce volatility in the market. The administration has also said it will seek bids for oil that meet certain environmental standards, such as lower carbon intensity and methane emissions. By buying and selling oil from the SPR, Biden hopes to balance his environmental goals with his economic and national security interests. On one hand, he wants to reduce U.S. oil consumption and production, which are major sources of greenhouse gas emissions and contributors to climate change. On the other hand, he wants to maintain U.S. energy independence and affordability, which are vital for economic growth and geopolitical stability. Biden's oil trade could have some positive environmental impacts, such as discouraging domestic oil drilling and encouraging clean energy development. By blocking new leases on federal lands and waters, Biden could prevent up to 1.2 billion tons of carbon dioxide emissions over the next decade. By buying low-carbon oil for the SPR, Biden could incentivize oil producers to adopt greener practices and technologies. By selling oil from the SPR, Biden could lower gas prices and stimulate consumer spending on other goods and services, some of which may be more environmentally friendly than driving. However, Biden's oil trade could also have some negative environmental impacts, such as increasing foreign oil imports and delaying the transition to renewable energy. By blocking new leases on federal lands and waters, Biden could increase U.S. reliance on oil imports from countries like Russia and Saudi Arabia, which may have higher greenhouse gas emissions than U.S. production. By buying and selling oil from the SPR, Biden could prolong the use of fossil fuels and delay the shift to renewable energy sources like wind and solar. By selling oil from the SPR, Biden could also increase global oil supply and demand, which could raise greenhouse gas emissions worldwide. In conclusion, Biden's oil trade is a complex and controversial policy that could have both positive and negative environmental impacts. The ultimate outcome will depend on many factors, such as how much oil Biden buys and sells, what kind of oil he buys and sells, how he uses the revenue from his trades, how he balances his energy policy with his climate policy, and how he cooperates with other countries on global energy issues. Biden's oil trade could affect the rural communities that depend on oil and gas production for jobs and revenue in several ways. One of the main effects is the reduction of oil and gas leasing in the Arctic National Wildlife Refuge, ANWR, and the National Petroleum Reserve Alaska, NPRA, which are home to some of the largest untapped oil reserves in the country. Biden has pledged to protect these areas from drilling and has suspended or revoked several leases issued by the previous administration. This could limit the potential income and employment opportunities for rural Alaskans who rely on the oil industry. However, Biden has also proposed and implemented several policies and programs to support rural communities in the transition to a low-carbon economy. One of the most significant is the $11 billion investment announced in May 2023 to advance clean energy across rural America through the Inflation Reduction Act. This funding will help rural energy and utility providers bring affordable, reliable clean energy to their communities through grants and loans for renewable energy systems, zero-emission and carbon capture systems. This will not only help combat climate change and reduce pollution, but also create new jobs and lower energy costs for rural residents. Another way that Biden's oil trade could support rural communities is by providing incentives and assistance for energy efficiency, electrification, and innovation. For example, Biden has proposed a clean electricity standard that would require utilities to produce 80% of their electricity from carbon-free sources by 2030, and 100% by this would encourage rural electric cooperatives and other utilities to invest in solar, wind, geothermal, biomass, hydropower, and energy storage projects. Biden has also proposed a Rural Energy Innovation Fund that would provide grants for rural businesses and farms to adopt clean energy technologies and reduce their emissions. In summary, Biden's oil trade could have both positive and negative impacts on rural communities that depend on oil and gas production. On one hand, it could reduce their access to oil revenues and jobs. On the other hand, it could provide them with new opportunities and benefits from clean energy development and innovation. The ultimate outcome will depend on how well these communities can adapt to the changing energy landscape and take advantage of the policies and programs that Biden has put in place to support them.